Investors and traders, welcome to the channel. Today is 17th of April 2024. I hope everyone is having a great day. We will review the US stock market. We'll take a look at the US dollar. We will briefly take a look at the gold market, and we will of course also discuss the bond markets through the eyes of the bond futures contracts. As always, this video is for educational purposes only, and it is not a financial advice. So today we had a mixed picture, and I will discuss more about what I mean about mixed picture in the US stock markets. So let's start with the bond market. So I'm gonna take a look at the 2-year Treasury note. This is the daily chart, but it's in the yield format. So what you see on the right hand side is the yield, what the contract is yielding at the moment. And when we were looking at it yesterday, it was just hovering around the 5% mark, and today it seems to have retraced a little bit. So there is some easing in terms of the pressure on the rising yields, which came in the market for this shorter term contract. But what is really important is the longer term. So we will take a look at the long bond futures contract. This is the daily chart for the Treasury bond futures contract. The duration is 30 years, hence it is also known as the long bond futures. And here what we were discussing was that this key pattern formation, we had a number of these one-to-one price projections, which we like to label as ABCD. Coming around here, we also have this channel support, and just below that 61.8% retracement, and below that around 114.05 was the 1.68 expansion of this swing. So a number of things coming together here. And what we discussed yesterday was that if there is going to be a follow through, that this market actually falls lower, then it would have been a failed pattern. But what we have seen is a bullish candle formation, and actually this candle took out the highs of yesterday. So the yields eased in the longer end of the Treasury curve as well, or the yield curve. So this is something that is to be noted. And if there is going to be a follow through to the upside, then this means that there is going to be further ease for the pressure, or I shouldn't say the pressure, in terms of the rising yields. And that is going to benefit the risky assets such as the stocks, at least theoretically speaking, because what has been going on for quite a while is the kind of expectations which the market had in terms of Federal Reserve cutting interest rates, and with some hawkish speech coming out, and harder than expected data for inflation, CPI for example. Those expectations might actually be being put on the back burner a little bit. But as I mentioned, just my personal view, I think we might still get at least one rate cut, if not then two, possibly during this 2024 actually. Just my personal view. Okay, so this is important to take a look at, and then let's take a look at the this is the 10-year Treasury note. This market is in fact bigger than the long bond futures market, and again we see a positive day here as well. So that's good for the bonds to be looked at from the long side. So the yields actually moving lower a little bit. Now really important, let's take a look at the dollar index. So this is dollar, and what we can see is dollar had a dollar sold off today. So that's very interesting, because it has just been going up for quite some time. We were discussing this, in fact, ever since this ABCD pattern formation took place. It's gone up. We had a number of resistance levels that we were watching. Those resistance levels were shattered to the upside. And where did the dollar go? It went right into this gap. You see this gap, which I've drawn with a with these red lines here. So there is a gap around here. It went right to it, which also happens to be the 1.618 Fibonacci expansion of this entire swing, this one. And then there is a smaller ABCD nearby, and I believe we are also completing the larger one. So let me actually take this and let me put it here. So there we go. In fact, that's not correct because the larger one is a little bit above that. So that one, it hasn't completed. But if there is going to be no follow through to the upside, in other words, this 1.61 expansion is not broken to the upside, I think the 107 level that we were actually expecting for this to go and challenge these highs, also because the bigger ABCD, we might not actually be able to achieve that, and that is all that we get in terms of a strength in the US dollar, and the US dollar could actually pull back, and you can see that there's a wedge formation here. Let me actually change the color of this so it's a little bit easier to see. So this blue formation here, and then of course this once it's possible it just comes back right into this structural high here, possibly touch the this trend line here, and if it's able to break it to the downside, then the chances are dollar is likely to come much lower, which should also help the risky assets, and it should also theoretically help metals, including the commodities in general, especially the base metals and also the precious metals. However, having said that, let's take a look at the gold chart. With the dollar that has been as strong as it has been, the gold is actually very, very strong. And today, the interesting thing to note in the gold contract, now this is the COMEX gold chart, it's not a spot gold, so your prices will be a little bit different because it is a continuous futures contract traded on the COMEX. Now here, the dollar actually weakened, and so did gold. So that's very interesting because a weakness in the US dollar should actually, in theory, help gold if it is priced in the US dollar, excuse me, which is what this contract is. But we did not see that, so that's interesting development. So it's possible that we have seen a lot of buying which came in from central banks, which actually really drove the prices higher. And especially this trend has been pretty strong since the beginning of March 2024. So there could be some element that, if there is going to be some ease in the geopolitical tensions, or some of the buying which came in because of unrest or potential unrest, for example, there could be some profit taking. Longer term, $2,700 is still possible. We have discussed that in our weekly video, so I'll recommend that you go and watch that for the gold. But the chances are that we might actually see some sort of a pullback that happens in the gold. And if we were to just really quickly see, the 38.2% retracement comes around 23.32, so around 23.35, around this area. I think that's quite easily achievable. And if it's going to be a bit of a longer correction, it could in fact take this into one-to-one price projection ABC formation. We could see the prices come a little bit lower as well, so that also remains a possibility. Now let's take a look at the stock markets now, and it was a mixed picture. So we'll start by taking a look at the European markets first. So this is a daily chart of the FTSE 100. This is the 100 blue chip stocks traded on the London Stock Exchange in the United Kingdom. And here, this is what we were discussing yesterday, that all the markets that we were watching, the US markets and also the European markets, key ones such as the German DAX and FTSE 100, yesterday they were hitting the 38.2% retracement. And today, in fact, that level has been held. So you can see that the FTSE has formed an inside bar formation. It did not take the low of yesterday, 16th of April 2024, out to the downside, not even by a tick. So that's interesting. And then if we take a look at the German DAX, which is the 40 blue chip stocks, and here we can see a similar kind of price action, in the sense that the 38.2% retracement has been held, and today's price action was actually an inside bar formation as well. Not as strong an inside bar as what we see in FTSE 100, but nonetheless, it is a inside bar. And in fact, you can see there was a fair amount of fighting that happened between the bulls and the bears, and they were not really able to settle at a very or one party won by clear margin, so they just kind of settled unchanged. So if I just hover over it, the open was 17,764.03 and the close is 17,770 spot 02. So in fact, what has happened is that it is a positive close by just about 4 points, or 3.79 points to be exact. So this is really interesting. Now if we move to the S&P 500, oh yeah, actually let's also take a look at the Bitcoin chart as well, out of interest. Now the Bitcoin has been doing this kind of formation, and if we were to draw a retracement, what do we see? We see even Bitcoin doing a 38.2% retracement since the low that was formed since the beginning of 2024. Isn't it very interesting? All these key markets are really at critical levels, right at the 38.2% retracement. In my opinion, what is happening around here, this is also an ABCD formation, so one-to-one price projection. Let's actually copy this like this. And here, boom. And I believe there is a talk of halving happening as well, so that should, in theory, in my opinion, be a bullish event. And what I understand about halving is that the amount of supply that is available, it will cut short into half, and that's sort of an event that takes place around certain dates, around certain times of the year, not every year. So in my opinion, the supply, if there's a more demand and supply gets cut short, then in theory the price should go higher. However, if it doesn't happen when the halving happens, and we break this 30.2% retracement, then that's a direct feedback coming from the market that what should happen in theory is not happening. So just watch out for that. So, and could that impact the stock markets or other markets? I don't have an answer for that, but I will pay attention to this if halving even does not give the kind of theoretical results that one might expect. Okay, now let's take a look at the S&P 500. So here we go. This one actually went below the 5042. So it actually went below the 38.2% retracement that we were watching. But as I said, it's a mixed picture, so I'll show you what I mean by that. So we've already seen the European markets actually holding the 38.2% retracement, but this one going a little bit below. So now actually also take a look at the S&P 500 futures. It also went below the 5089 and closed around the 5061.50. Now if we look at the Dow Jones E-mini futures, we can see that has in fact held the 78.6% retracement. If we just take a retracement from the highs of the 38.2% of this entire rally is a little bit lower. So this one has held, and in fact it did not make a new low. S&P 500 did, cash and also the futures. Dow Jones futures did not. Now let's take a look at the NQs, and we can see that the NQs actually went lower considerably, the 38.2% retracement. So of course they went a new low as well. And if we take a look at the Russell 2000, it made a new low compared to yesterday, and it's also right at the 78.6% retracement. And if we were to draw a retracement of the entire so we have a confluence of two things. The entire rally from October 2023, it's also right at the 38.2% retracement of that. So it's a little bit of a mixed picture, with Dow Jones giving a slightly different picture for the US indices, the NASDAQ 100 mini futures the S&P 500 E-mini futures and the cash market broke below 38.2% retracement. So I think we'll have to put things together and actually also watch if all these markets are breaking that key level, and if it's able to break that with gust as well. So yeah, from a price action perspective, those two indices, NASDAQ 100, S&P 500, breaking those lows, not something really what we were really looking forward to, in terms of we were expecting that perhaps that level could hold. But these markets are, they look to be pretty oversold, so we could get a rally, and the Dow Jones is giving us a clue by not making a new low compared to yesterday. So that's something very interesting. So we'll wait and watch and see the price action for the next couple of trading days, and we might actually see some sort of relief rally at least coming into this market, which are pretty oversold in my opinion. This is what we are watching in the markets. The key thing to watch is that the dollar actually sold off today. The gold also sold off, which should have been an inverse relation because of gold being priced in the dollar. And then a bit of a mixed picture we see in the stock indices. The European stock indices holding the 38.2% retracement. Bitcoin just hovering at 38.2% retracement, and mixed picture in the US stock indices as well. So we'll have to wait and watch over the next couple of trading days the price action, and it's possible there could at least there's possibility of a relief rally taking place, and then we'll take it from there. So thank you very much for watching. Good luck, good trading. Speak soon.